guys, in this video, we're going to show you a live trade in detail that actually anyone, I mean anyone that has been paying any remote attention to some of the subscription videos that our 13 Market Moves daily subscribers are paying for monthly, I've actually been releasing them on this channel. So if you've been paying actually very close attention, this video was released before all this action that this live trade was based on took place. So anyone really could have taken advantage of this, but bottom line, 27K turned into 115K plus in less than 12 hours in less than 2 trades. Actually, 2 trades to be specific. I don't know why the hell I said less. But more importantly, for those of you that are trying to learn how to trade profitably, how to really get good at this, here's some questions going to be covered in this detailed trading live video. Questions are such as like most of the guys that struggle with like, when the hell do I take profits? When do I know when to get in, when to get out? It's going to be, look, instead of just talking about it, I'm just going to show you in this video how I do it. I got plenty of videos on this channel that show how to do it, show how to do this, this, and this. But this one is just about execution. How do you take the information that I try to share with you guys on this channel and make it profitable for yourself? So the execution is going to be shown in detail. Next questions are, when do you know when to keep positions and when not and what not? Okay, how to close positions for best result. I'm going to show you a simple strategy that I use. If you pay close attention to how I actually get out of this trade once I'm in it, it should give you some really good details on what you can do and how you can close out your next position to get best results. Now, and this is a weird question. I don't know why I put it here, but do you have to be a rocket scientist to trade like a rock star? And that is a weird question. What the hell was I thinking while I was typing this? So the answer is no, you don't have to be a rocket scientist to trade like a rock star. You just have to be a damn rock star. Guys, and for that, we have a special course that's actually called Trade Like a Rock Star. So if you want to know all the details, how you can trade instead of getting these, returns 5, 10, 12%. That shit would put me to sleep, straight up. So you ain't going to see no 5, 10, 12% gains here. I'm going to show you a real live trade that took place between May 22nd and May 23rd. And you can see the results. You can see the details. Here it is, guys. I'm just going to shut the hell up so you can see this. Hey guys, in this video we're going to take 27K. I'm going to show you how to turn it into 100K plus in just a matter of a few trades. I know you've seen probably some of my videos where I show you how to turn 200, 600 bucks into like 7,000, 8,000. So actually, that's a lot harder to do than turning like 20, 30K into 100K. But I've had some requests about it. So here it is, guys. We're going to start with our first trade. It's actually, today's May 22nd, and the trade we're actually going to take is going to be this AEVGO trade. We're going to buy some puts. We're going to buy 100 puts at 2.2 right now. Actually, the stock is heading higher, so 2.2. Okay, we bought 100 AEVGO puts at a price of 2.2. I just went ahead and paid the ask. The spread was not huge. They were bidding 2. Paid 2.2 for those. And here's the deal. I mean, the market looks like it's moving higher. Apple is dropping. So when Apple is dropping, we're expecting this thing to reverse. If you've been following our 13 market moves analysis, we've been bearish on AVGO. So there's an actual trade placed live. So you guys can see that I'm actually shorting this thing as it moves higher. So it gaps down. I'm waiting for the bounce. I'm shorting this thing right here at 273.80 when I pulled the trigger on this. Okay, so there it is. Got 100 puts on this, and we're going to go ahead and set a limit order. You know, I like to set these limit orders pretty much as soon as I get in these positions. That's one of the rules I have. So I'm going to sell some of them at about 5.9. So 5.9, got 50. Done. Okay, so I got that limit order sitting there. Actually, stock actually moves against me right now. Losing 1,450 bucks. Okay, in the second order, we're going to set selling the other 50 at a price of 9.9. Here it is. Done. Handle. Okay. All we can do is be patient now. Okay, and the second trade we're going to take is Qualcomm puts. Currently trades at 69.80. I want to go ahead and buy these. I want to buy about 45 of these puts on Qualcomm at 107. That's fine. Let's go. Whoa. They wouldn't let him buy. What? Okay, so I have to pay 112 because the stock is dropping. Just buy it at market. I'm fine with it. Just do it. Okay, so I bought them at 112. And we're going to set a sell order. To sell these things, create closing order. Yet, we're just going to take a small gain, like 1.87. Okay, done. Handled. The order is in. All right, let's go. I mean, here's the reality check. A lot of traders would have gotten out because as soon as I get this order in at 273.80, where I was getting in right here on these 100 puts of an AVGO, the stock rockets higher to 275, so we're temporarily showing like a loss of about 3-4K. The reality is most of the traders would jump out, but based on our calculations of the chart, you know, the stock, when it gaps down, has a low probability of breaking and closing this gap. And here it is. Here's the reversal. So the account is at 31,226 currently. The other trade is not doing so good. Qualcomm, we actually, added like 8 more contracts. So we got a total of like 53 contracts of Qualcomm puts, 69 strike. So we'll do a review here and we'll see what's going on. But currently we are actually losing. We are losing our butt on Qualcomm. Here's the trade. We're losing $682. Got total of 53 contracts, and damn it, it looks green. It looks like they're buying the dip, but we're going to hand in the trade just a little bit longer. Okay, as a matter of fact, I got to change this. We've added like 8 more contracts, so I've got to change this sell order to 53. 53 contracts at 187. We'll take it out right there. Done. Okay, guys, here's the dilemma. This is what I discover. A lot of traders, man, they're like, dude, you're up $7,000 in less than 45 minutes. Don't you just want to take the gains? Don't you just want to lock it in? Don't you just, like Leonardo, but you're $7,000 in the green. What are you doing? Close your position. Guys, you don't just go in and close your position. We're calculating the bigger move. Okay, charts tell us where we should close the position. You should not be closing your position based off how much you're making. You should be closing and entering your exit. You know, you should basically target, God damn it, you should target your entries and exits based off the charts. Okay, so the way we calculate the entries and exits, we go analyze different variations on the charts, different time frames, different divergences. We look at the 13 markets move formula and so on to calculate this. So ultimately, you're probably sitting there wondering, well, how the hell did he know that, you know, after hitting this, 275 was going to reverse? Right, guys, this is a lot of homework goes into it. If you want to know how to do that, I mean, it's not a rocket science. Anybody can do this. It takes dedication. It takes discipline. It takes time, at least an hour, 2 hours a day looking at charts, understanding how the market moves formula works. And thank God there's not like 28 market moves. There's like 13. So if you can learn that, you guys can do this too. If you'd like to get more details,
political editor says,
like to get more details on how you can learn more, how you can envision trades like this before they actually take place, click the links below. Get the extra info, guys. Make this year your best trading year ever. He's not human. He's an animal. He can see the future. He got these things. You know, he can see things before they happen. Guys, I get all kinds of crazy comments, but I mean, the reality is it's all in the chart. So let's review the Qualcomm trade. Okay, it's now at 68.93. So remember that trade, we're losing a bunch of money. Actually, this is AVGO, so we're making 10.8. And remember, those of you that were sitting there thinking, dude, Leonardo, get out, you're making $7,000. Well, it's a good thing we didn't. It's a good thing we did our homework before we got into this trade. But let's look at what is the other thing we traded? Qualcomm. Everybody's so damn bullish, but we're so bearish, and we get paid. Making $1,667. I know it's not looking as good as this AVGO trade. But if you were subscribed to the 13 Market Moves Daily today on May 22nd, before the market, you would have gotten, you know what I'm going to do for those of you that really trying to learn, they're really trying to understand this stuff. After I'm going to finish this live trade, I'm actually going to insert the video, the 13 Market Moves Daily video, where we describe these two trades right here to our subscribers. And we specifically showed on the chart why we would be highly interested in taking these trades. We described a bunch of things. So stay for the end of the video if you want to understand the chart's reasoning behind these two trades right here, guys. Hey guys, one of these days, or the second half of the day, where the market just moves like a turtle. Man, drives me nuts sometimes. I'm sure it does the same thing to you if you're trading actively. But here's what we're going to do. This Qualcomm was generating some profits, and we're actually going to cut this position. The charts look awesome, but there's just something wrong with these option valuations, the way they were fluctuating. Remember, we're buying them at this higher level, and now we're still about $1 from where we were getting the position, and we're actually showing a small size loss. So we're going to go ahead and take the loss. Now, AVGO, as far as that position, we still own the 100 contracts. And so AVGO, just to review the trade, so making 9K, okay? So we're going to hold on to that overnight, and we're not going to do anything with it. Okay, now the Qualcomm trade, so $9,300 profit on AVGO, still holding 100 contracts at this point. They are in the money. Remember, we were getting in earlier at about $373.80. Now the stock is at $269. Generating $9,300. We're getting it at an average price of 2.12, and right now these contracts are worth about 3.1 if we're to close them out. So actually $9,800 profit for the day. We need to get out of this Qualcomm position. I don't like it. It's not the issue with the position. I don't like the way the options are trading on this thing. We should be generating substantially higher profit, but these options are dropping like a rock. So we're just going to get out. We're going to lock a small gain. We're just going to sell them at the market, okay? And we're just going to get out. Now, most of the people, guys, okay, done. So we sold them at 93 cents. We're buying them. There's the reading bell. We're buying them at $1.09 earlier. So we took a $871 loss. Now, I know for some of you that are trading, you're like, whoa, hold on, this one is losing money. Why are you closing the position that's losing money? Why don't you close the one that's making money? That's probably like a typical mistake that you are, especially if you're new, that you're going to want to make, is you're going to have a tendency to hold on to those positions that are losing you money, and you're going to have a tendency to sell the positions that are making you money. So just if there's something you can learn as from what I just showed you, what I've done, is I've actually cut the position that was losing me money by the end of the day. And I've cut the loss, $871 loss on this trade, guys. But overall, we moved the account from 27K to 37K by the end of the day. 10K profit mainly, and that's, about $871 loss here. And if we pull up the AVGO trade, by the end of the day, actually we're making 11.3 altogether on AVGO. Looks like last few minutes it just gapped under that 269 level. $800 loss on one, $11,300 gain on another. So overall, roughly about 10K net gain for the day. We'll review the AVGO trade. As you can see clearly, the market is closed. We're going to keep it overnight. We'll review the trade tomorrow, guys. Have a good night. I'll catch you on the review of this trade tomorrow. Okay, guys, market just opened on May 23rd, 2019. So based on our calculations, here's what's going on. AVGO. Remember, yesterday we're getting into this trade at 273.80. So here's what 100 put options would do. Now the account is at 72,982. We're waiting for it to hit about a level of 260, 259. That's ideally when we want to take some profits. So I'm going to wait just a little bit longer. Sam, what's going on? Wait. I will start sell 10 of these AVGO contracts when it hits 259.50. Okay, so yours are 275s. They're in the money, so they're going to be worth about 16. I'd say start selling about 16 and a half. Okay? Set a sell order to sell 10 at 16 and a half. I'm going to wait on the rest. VIX is moving higher. S&P about to set the low, about to retest at level 28.26. Let's see what happens. Let's not. Let's wait. Wait. Okay. Oh, sell the rest. Then sell them at increments of 10 each. You got 60 of these splits, right? Okay. So set them in increments of 10 between a range of like 17 and 25. I mean, there is a chance it could drop to 28.56, 28.53. Okay, then they could be worth as much as 20 to 23 bucks. So just start taking profits though at about 16 and a half. Okay, be ready. All right, let's do it. All right, the account is at 90K, which tells us AVGO keeps dropping, hitting the level of 261. Here, let me pull this up on a larger time frame so you can see it. So that's the drop based off the charts, right? If you want to know the details, stick for the end of this video because I'll give you like all the details on the chart behind this trade. But this is what we were doing, right? So yesterday gaps down, it jumps higher. This is where we get in at 273.84. I think that right around here. Then it slightly drops. Then it bounces. We lose about 4 grand here. We stay in the position. We don't panic. Then it finally makes this move 11. If you guys are not familiar with 13 market moves, definitely study it. It's going to help you identify when to stay in these positions, when not. Boom, at this point, we're making like 7K. A lot of people would collect the gains, but we knew that the follow through on the move lower was going to materialize, so we stay in it for the rest of the day, just plays mind games with us, and another break lower today. We'll do a follow-up on this in just a little bit. Okay, guys, it's time to set some limit orders. I haven't done them this morning yet. Here's the idea. The market could stall at this 2020 level, setting some new lows, but this show cannot go on forever, like meaning at some point it's going to hit a low for the day, and it may just stall out there. As you can see, the count just hit 100,000, 101.9. We did this, guys, within 12 hours. We put this trade yesterday morning on the 22nd, and today's the 23rd, 9:40 a.m. So here's what we're going to do, right? We're going to go to this AVGO. We're going to go to this AVGO trade. We're making $76,800 on the trade. Profit loss for today, plus 66K. That's how we do it at 13 market moves formula. And here's what we're going to do. We're going to create closing order. We're going to start collecting some gains on the position at a level about 10.5. 10.5, we're going to sell 10 of them. Start taking some gains here. Come on. Sell 10, 10.5. And we don't want to start selling all of them, but we definitely do want to start taking some gains here. Okay, then the next sell order we're going to put at create closing order. We're going to create a closing order to sell 20 more at 11.3. Now it could drop to a level of 256. We don't want to wait because, you know, sometimes these bounces can come quick, so we really do want to start taking some gains. All we are really calculating is another dollar drop, because sometimes these stocks, they'll just undercut like a firm level, like a 260 or something, and then they're going to bounce out of that. So that's what we're waiting for. Basically, an area of 259, we should be able to execute those 30 contracts. Another maybe 50-cent drop, and this is actually our sell order right there, sitting at 10.5. Come on, let's. So moving to this 259, boom. Got 10 sold, okay, so we sold 10. As you can see right here, we got 90 left. The account is at 110K. Got 90 left. Remember, we're buying them yesterday at 2.12. We just sold first 10 at 10.5. That's a 500% return, guys. The whole point of this video is to show you that once you know how to do it with small amounts, you can scale this up and do it with bigger amounts. All right, so there it is. Hitting a new low for the day. That's fine. Let's go ahead and set 50 of them in case we get like a crazy break lower, right? What we want to do is we want to sell 50 at 14, which basically going to be right around that area. If it hits 256 level, I want to be in there. I want to sell them at 13.9. I'm going to sell 50. All right, and we would still have, we sold 10, we got 90 remaining. I just set a limit order for 50 of them to take them out at 13.9. I do have a limit order sitting to take out 20 at 11.5, right? 11.3. That's our order right there, 11.3. Looks like we're about to get it. And then we'll have still 20 left. 11.3, come on. No, it's bouncing just a bit off that 259. We don't want to overstay the welcome either. Nah. I'm going to wait just a little bit longer. Let's see what the rest of the market is doing. See, the market is stalling right around this 20 level. We're making new lows for the day, but again, sometimes this shows they do stop. So, no, just made a new low. Keep staying. 11.9, so that's going to be us right there. 11.9. Gonna wait. Another 50-cent drop. We should be able to get this fill here. Okay. Come on, come on, come on. Let's go. Don't stall on me. Keep dropping. Another 50, 60 cents. Let's get this executed. Okay, and I'll have just, sometimes they do make, no, I think we missed it. I'm going to sell 20. Take a look at the market again. There's still potential it's going to drop, so we're going to keep that order in there. Market just broke for that 28.20. VIX is breaking to the all-day high, 17.36. Amazon about to break down. Okay, looks like we got getting some green bars overall. Okay, show some stalling in action, so we're just going to go ahead and sell 20. It is what it is. Let's sell them at market. Let's unload these. We'll sell these at 10.8. Okay, done. Got 70 remaining. Okay, it's going to keep dropping. That's fine. Sell order to sell. So we got this 70 remaining split into two orders. One order to sell 20 at 11.9 and another 50 to sell at 13.9. Okay, showing some green marks. Definitely showing some green. We want to get out. We want to get out. Just sell them. Sell them now. If anything, we'll get back in. Man, come on. We'll sell 20 more right now. 20 more at market. It's like we're going to sell them at 10.9. Okay, sold. 20 more at 11.3. Nice, not bad. Still got 50. Still got 50 left. Get out right now at 11. Okay, we're going for a bounce, so we're going to be out right here. Sell at market. Sell at 11. 50 AVGO at 11.23. Beautiful. Okay, so here it is, guys. We locked in a $78,350 profit in 12 hours. The account is at 115,430. For those of you that would like to learn more on how you can ultimately do this, just click the links below. Learn the 13 Markets Move formula, learn our charts divergence course. There's all great information that can help you not only identify trades like this, but help you with the execution of the key levels on these trades as well. Okay, and for those of you that actually stayed all the way till here, as promised, woo! Here's the video that our 13 Market Moves Daily Analysis subscribers have received before the big drop in AVGO actually took place. So if you are looking for a channel, if you're looking for a way how you can meaningfully translate what takes in the marketplace on day-to-day basis, guys, it's very simple. If you try to become a better day trader, a better swing trader, learn the 13 Markets Move formula first by going to tradingoptionslive.com. TradingOptionsLive.com. Get all the details, get all the information. You can click the links. They'll tell you about the formula. You can click the links about our 13 Market Moves Daily subscription. And here's the video. So if you would have gotten that before the market opened that day, guys, you could have easily executed the same thing. Check out all the details right here. 21st, 2019, Tuesday. Guys, we got tons of stuff to cover, so grab a pen and paper. Here are the key observations from yesterday, May the 20th. Do not trade with big directional positions because we're currently trading in the middle of the trading tunnel. Unless you're executing a bigger position on like an earnings play or on a stock that has some particular news that's going to drive that stock in either direction by a greater than normal amount, despite of where the market is trading, meaning whether it's in the middle of the tunnel, upper trading range of the tunnel, or lower trading range of the tunnel. Now, here's what we're observing. The key observation is the drop in October of 2018 was actually led by the semiconductor drop. So in other words, before all the other stocks started dropping, we noticed a drop in the semiconductor stocks first. And that is actually exactly what we're observing again. We're going to cover a ton of charts to bring some lights. So if you're holding your position on AVGO, this should be very helpful. Now, new outlook on the VIX. For the last few days, we've been really trying to get an idea of how seriously this market is taking the current conditions. And we considered the possibility of VIX dropping below 15, 16 and getting us in this nice, peaceful environment. I think that's pretty much, based on what we're observing right now, is off the table. We're going to see VIX actually stalling each time it's going to get to the 14,815 level. And near term, we are considering a short-term pop followed by a bigger drop in the making that should actually get us back on the VIX to about 1920 by Monday. What we're looking specifically at today is any signs of another 11 or a 6. So once it is confirmed, we are going to go big on puts. And we're going to cover the earnings on AZO, Home Depot, and DSN in just a second. So next 7 days, short-term pop. And we're not even sure how long this pop is going to last. We think we're going to get a pop today, followed by a possible drop tomorrow. And we can continue dropping for a few days here. Because at that point, we're going to be retesting the lows of the lower trading range, which is going to be crucial because with the current charts that are pointing pretty much everywhere I'm looking at, guys, right now on the charts, I'm either seeing head and shoulders or a move 11. Move 11, pyramid, head and shoulders. I mean, we're going to take a look at a bunch of the charts in just a second. I think it's going to bring a lot of light to making sense out of this market. Now, clearly, if some crazy tweet from Trump comes and, bulls are getting obnoxiously aggressive above the level of 28.90, we'll have to reconsider this strategy. But until that happens, I think short-term wise, shorting the pop is going to be a much better strategy than staying on the call side. And it's been a tough call to make because later in the video, I'm going to show you a couple of charts of the VIX. They've been getting us some really mixed signals. So, and you are going to get a lot of mixed signals once you're in the middle of the trading range, in the middle of this trading tunnel. And therefore, it really does not pay to establish huge positions when you are in the middle until we clearly get a break lower or a significant move higher on stronger volume. So far, what we're observing across the board is any short-term pop would be a good opportunity to establish some solid positions on the put side. We keep observing this on the charts. Now, this is actually pre-market action, and as I'm recording this, I took this picture maybe an hour ago, but the market's actually bouncing higher right now. But nonetheless, it is preceded. These move higher in the market. Again, pre-market is preceded by these patterns of a top, by patterns of a move 11. And we've been observing them all over the board, especially in the last couple of days. What we are considering is a retest of 2860, 2670. At the time I'm recording this, we're about 2858 on the S&P futures. So 2860, definitely we're going to retest that. 2670, 2870 is what this should have said, likely today, followed by a drop to 2826, literally in the next 24 to 48 hours. What we have witnessed is every time we get to this higher trading range of the tunnel, as soon as we get there, we begin to drop, which is clearly represented in the next picture I'm about to show you here. So look for a higher low for the entry point on the put side. Right here, I've got 3 dots, 1, 2, 3. So consider this top 1, top 2, top 3. And ideally, we want to establish and start building. Notice I'm not saying jump all with your entire account. I'm saying start building some put positions. When we're saying start building some put positions, you can short the SPY, you can short the Qs, you can short some key names, like Amazon, Google, so on. There's one particular sector that clearly points to a further drop, so I would consider shorting that sector on any bounce. But again, pop and drop. Notice the moment we get anywhere close to this higher trading range of our tunnel, look what happens. We don't stay there very long, right? Pop, drop, pop, drop, pop, drop. I think that's exactly what we're about to witness today. We're going to pop back to this level of 28.70. Now remember, these levels, they're not 100% precise, so we can get to 28.68 at 28.72. So right around this area is where we're targeting for an entry and start actually building the put position. So the ultimate question is on everybody's mind. Well, hold on. What about this? Could we pop to 28.90 first? If you analyze this picture right here, the whole idea is designed on a possible scenario where we're just simply going to establish a lower high. So if you draw a line right here, this high is lower than this high. This high is lower than this high. The next logical stop would be in the area between 28.60 and 28.70, confirming this downtrend in the markets. So that is why we don't think the probability of actually a pop to 28.90 has a high probability, but we're not completely discounting that and taking it off the table. So we're suggesting starting building position about 28.70 and observe further action. So if we see the further pop does continue to 28.80, 28.90, this may be another area, especially observing that on low volume, to come in and buy some more puts at those levels. If we're getting in at 28.70 today, and as soon as we get in, the market starts falling off. In other words, we're seeing some clear observations of a move 11 of another pyramid, then definitely use that opportunity to get some more puts. Here's what I wanted to bring to your attention, guys. Probably some of you were wondering, Jesus, what is he doing buying calls on this ROG? Guys, this is actually one alert that I did trade myself on a Friday, but I didn't get a chance to send out to you guys. I wasn't even buying options because options were severely overpriced in this thing. So I just shorted some shares of around about 152 on this ROG. I kept it overnight till Monday, and so the shares did drop to a low of 122. But here's what happened next. So pay very, very close attention to this because it's going to give you a really good case study for understanding when is that you're supposed to be buying the dips and when is that the dip is not really the dip and it's going to continue. So I'm going to give you multiple examples, but this is a case example number one to help you understand what to do with the dips. Very, very close, guys. Right here, we get gap number one, portrayed in this orange dot. Gap number two, portrayed in the second orange dot. Gap number three, so you got 1, 2, 3 gaps in a row. You got one big red candle on huge volume, second red candle on bigger volume, and the third red candle, which is this tiny candle. As you know from studying the charts and divergences course, this is a bullish reversal candle where something drops to a low on the third day and then it reverses and starts going higher. Now look at this red volume. I know this is super deceiving because in reality, this is not supposed to be a red candle. It is only red because the stock still does end up closing yesterday minus $2.19. That's why it's red. In reality, it was a huge bullish move. How would you know that was a huge bullish move? Look at this V. Anytime you guys see a V formation on the day 3 of the drop, that tells you that they're really buying the hell out of this thing. So when this V formation was confirmed the accumulation, that's when I sent out a message saying, hey guys, buy some calls on ROG. And a lot of you probably went to the chart and you see, oh my God, this thing is dropping like crazy. Why would I want to buy calls? Well, it's because of this V. And in the further charts we're going to look at, you will notice that many stocks are actually forming this multiple gaps lower. However, what they're not forming is this V formation. So the ultimate volume in this particular example went into this stock on the way higher when it reached the levels of 122 to this 135 level. And the stock did end up actually breaking above 140 at one point. Failed to close this gap. I think the stock is actually going to try to attempt to break above that gap. So 145 level would probably be the target area if you're still holding this position. Once it hits 145, I'd probably take some gains or maybe just close out the whole thing. This is the key observation right like this right here, guys. On the accumulation, look to see if there is a V formation and look at the rate of change in this V form, right? We were just selling off like crazy, followed by a huge move. Pretty much all the shares that were sold were repurchased back right over here. So anytime you see this stay away from shorting the stock, because the main argument is going to be, well, it drops too much. I mean, it dropped from 180 here to 120 in 3 days. Beautiful drop, right? So I caught a little bit of it. I didn't send it out because these options had such a huge gap between the valuations. It was really tough to buy them at good prices. But yesterday we did buy, and we were buying this 125 and 130s, and they wouldn't make a reach overnight, but certainly they produce a decent gain of about 50% on some of them, depending on when you were buying them. So here's the next chart to help you understand this V formation. So this was the sell-off in ROG hugely right after the market opened, $20 drop, followed by a huge spike. So when you see this, right, just remember, this is a characteristic of what? This is a move 13, okay? Huge volume, followed by a huge buy volume. And look how rapidly this happens. I mean, this whole thing happened, the sell-off happened between 9:30 and 10. We hit the low at like 10, and then from there it was smooth sailing all the way higher, pretty much. And the stock, as you can see, tried to drop back to 137, held its level, finished at pretty much 140. So remember this. This is, when you see this on the 3rd day, the probability that all of a sudden it's going to reverse and drop lower on the 4th day is not very likely. It does not mean that ultimately, like over the course of the next few weeks, it's not going to revisit this low, but chances are all the people that were buying these shares yesterday, they are going to support it at these levels of 135, 140. Chances are they are going to try to push the stock just a little bit higher, at least from here. As you can see, accumulation towards the end of the day was really strong. You can see the accumulation here was just completely unwinding, and then it shot up. So there's another V form right here. So remember the V, guys. This is the main lesson for the day. V. Think of the V. Victory. Okay, the bulls beginning to win on the day 3 of the fall. So how are we going to apply this towards the future analysis here? I'm trying to make it as simple as possible, guys. Okay, so we're going to take a look at some charts. Let's take a look at the chart of Apple. Same scenario, right? You have gap 1, gap 2, gap 3. Do we have a V? Can anybody see a V here? There is no V, okay? There is no V because what we actually have here is a head and shoulders on Apple. Now, the good news to those of you that are short semiconductor sector, anytime Apple drops, semiconductor stocks also get hit. So as long as Apple continues to drop, that would also be a negative impact on any semiconductor stock out there. What we're also observing, what's happening in Apple in the last couple of weeks, is an exact mirror image of what was happening to Apple in October, November, December 2018. Look at all these multiple gaps lower, right? 1 gap, 2 gap, 3 gap, 4 gap. Until finally, look at this. This is important. Look at the V right here, guys. Look at the V. Do you see the V? I actually posted a video, right, on this after this last gap lower happened, predicting this gap up here. And I did get that right. And if you're curious to just find that video. There's a lot of details on how we converted from these lower gaps to a move higher. Now, I don't think we're ready, nowhere ready to be forming a V here. As a matter of fact, there's plenty more people that could be taking money out of Apple. So easily 175, 170 could be in the cards for Apple over the course of the next few weeks. So just keep this framework in mind as we look for some other charts right here. So here's AVGO. AVGO, probably the best target to stay short semiconductor sector. Not only does it's still trading closer to the top range, which is desirable when shorting. We want to short at the top. Among all the semiconductor stocks, which are naturally being hit by just being in that sector, AVGO also's got Federal Trade Commission looking into its practices. So anytime you got FTC investigation, guys, the upside is going to be rather limited. So for those of you that may be seeing, oh, well, AVGO temporarily popping higher this morning, guys, it is fine. There's nothing to be worried about. As a matter of fact, if I see a pop maybe to 277, 279 level at AVGO, I would be definitely adding to the put position. Why? Here's your head and shoulder. We're talking about the semiconductor. We're talking about that top in AVGO for the last couple of months. But when the chart looks like this and bullish, of course, not many people want to take action. But now that we not only confirmed the double top, but we've also confirmed the head and shoulder, we've also got 1 gap down, 2 gap down, 3 gap down, 4 gap downs in a row, okay? It is likely that we will revisit this level of 253, 256, right where I've got this orange thing, okay, on accelerated volume. So when these gaps down happen on low volume, not important. When they happen on accelerated higher volume, as you can see, volume in the last 3 days is increasing. The last 3 days, there's the first day down, second day down, the volume goes higher. Third day down, the volume goes all the way up. Do we have a V? Can anybody see a V formation here? No. It tells us that we can fall lower. And also, if you observe the sign, we pretty much closed yesterday at the lows on AVGO. It did hit 268, closed at 272. But this candle does not look nowhere as bullish as the candle that we actually discovered right here in our case study of ROG. Look at how bullish this candle, right? It touches 122, finishes pretty much at all-time highs for yesterday, that is, of like 139.85. So the lows were hit and immediately some huge volume came in. This is a totally different picture from what we're seeing in AVGO. AVGO, we're seeing continuous volume, people coming in, they're getting out of the stock. And I'll give you a good example. Some time ago, when Tesla was at like a 280, 290, somebody left a comment because I posted like a bearish video on Tesla saying it's going to drop, it's going to do something it hasn't done in 2 years. Now somebody commented, well, we're going to buy it. Oh man, we're buying. We're going to do exactly the opposite of what you're doing, which was fine. I responded saying, look, what you're buying that looks like a bargain price of 280, 290 right now may not look like a bargain. As a matter of fact, it may look like a top to you going into the near future. And a lot of people are saying right now, well, no, buy the dip in semiconductors. What they're not telling you is this head and shoulders, this consecutive gap downs on accelerated volume. This is exactly the conditions that were preceded to a further drop in Tesla. There was exact conditions that were preceded to a further drop in Bitcoin from its highs. So the strategy you want to use in this type of conditions, anytime something moves up higher, you want to come in and you want to short. You don't want to buy calls, because every one of these gap downs that were created in accelerated volume is going to be a milestone for this company to get back to the previous levels. And it's going to be very hard for this thing to reach its previous highs. So if you want to play extra safe, just buy this puts, 300 level puts, 290. I mean, the alert went out. I did post a video right on Thursday saying, hey, in solidarity with NVDA pop and drop, let's go ahead and buy these 295, 300 puts. So for those of you that has hold on to them, had a nice payday yesterday. But for those of you that missed the trade, this is not too late to actually come in and do this, because there's multiple things that show the stock can definitely visit these levels in the 250s. What makes us say so, if you study the history of the chart, there's been a number of instances where AVGO, and there's been one instance where it literally dropped from 250 to 198 in one day. It's not on this particular chart, but you can see on this particular chart that it is capable of dropping from 260 level all the way to 200 level within 3 days. So $60 drop in 3 days. So far, percentage-wise, this drop has not been met, even with the last couple of crazy days in the drops in AVGO. What we're saying is there is still room left here. We could get another day of accelerated volume either today, tomorrow, or basically over the course of the next 72 hours. And then those people that thought this was a bargain at 280 on the call side, they're going to be thinking, oh my God, why didn't we wait till it hit 250? Why didn't we wait till it hit 260? LRCX, that was another stock mentioned. Look how consistent this sector is, right? Another head and shoulder, another divergence on the RSI, another 3 gap down, 1 gap down, 2 gap down, 3 gap down. Guys, look how consistent. This one is in the danger zone too, because it just broke below this 50-day moving line, and it's going to be fighting against it, but that would be an ultimate point. These 190 puts are looking good. Do you see a V? There is no V here on the accumulation, which tells you further drop is likely. This one we don't trade, but it's good to take a look at it because a lot of institutions are trading this one. MU, right? Multi-top formation, gap 1, gap 2, gap 3 on accelerated volume. Do you see a V? No, we don't see a V here. Nobody's buying it. ASML, head and shoulder, gap 1, gap 2, gap down 3, gap down 4. Similar as a lot of other stocks in this sector. Look, it's hidden against this level of 50-day line, which is now a resistance, no longer support on accelerated volume. Do you see a V? No, there is no V. Therefore, there is further room for this thing to drop. Maybe revisit these levels of 181 would be the next stop. And finally, a case study from Tesla. So those people that you hear talk in the news that talk about that these semiconductor stocks are bargains and they ignore all the chart patterns that we've discovered about the sector over the last couple of months. They were also the people that were saying that Tesla at these levels of 300, 280 was a bargain. However, look what was preceding the drop from 300 all the way to 200 in Tesla. Look what was going on. Well, before that, we had gap down 1, gap down 2, gap down 3, gap down 4, gap down 5. They were saying buy. We're saying sell the hell out of it, short it. Okay, buy puts and keep buying puts every time it bounces. So this is a great illustration for where semiconductor sectors are likely heading next. Now notice, it's easy to be a bear when things are dropping. So clearly now that you've had this pattern for so long, gap down, bounce, gap down, bounce, gap down, bounce. This pattern has been playing out now for so long that all the analysts that were bullish, now what are they doing? Well, they're slashing prices on Tesla now. At exactly what point are they doing that, guys? Why did we start sending messages yesterday saying, hey, get out of Tesla puts? It hit a level of 195, and what happened? What do you see right here, guys? It's a V. The stock goes from 250 to 200, or actually this candle right here represents a low that was set yesterday to 195. Our target on it was 187.5. But again, these targets, guys, you got to be a little bit flexible. So when you notice this is how you know that this is probably temporarily done falling. And everybody's tempted to be a bear on Tesla now. It's too late to be a bear. We were a bear in Tesla from this 300 level until yesterday. Right now, the downside is limited. It's likely we're going to see like a level. We're going to see a fight between 195, 205. Now, we will consider if something changes here in the accumulation, we see more sellers coming in over the course of the next few days, and we see a level of 187.5 broken to the downside, then we'll reconsider getting into puts. But at this point, a bounce higher is likely. Do you see this V? What's interesting is the divergence between the accumulation and the price action. So the stock keeps falling. What happens to accumulation? Look, if we're to draw 3 dots, dot 1, dot 2, dot 3, the accumulation actually goes higher while the stock continues to drop. Also coincides with the oversold territory on the RSI. That's another way to look at it. But clearly, with all the negative things, there's some people that are taking bites at this stock in this area, and this fight could continue on. We're likely to see a sideways trend, and good points to get in back into the stock is clearly if it bounces back to 220, 230 level. That'll be a good entry for a short position. But right now, the best thing to do is just to trade some other things. And this was just a quick summary. So Morgan Stanley actually moves the price target. Morgan Stanley basically refuses to give their honest 100% opinion on the stock. So what they do is they give you the bear case, the bull case, and like the base case. And so this morning, Morgan Stanley said, well, good morning, America. We're slashing our bear case on Tesla from 97 target price to all the way to $10. And I had a good laugh at it because coincidentally, about exactly 1 year ago, I posted a video on Tesla with some reasoning, basically just economics 101, the supply side versus demand. I said the demand was going to go down. The company was going to face some issues considering their debt load and so on. So I said target price on Tesla, $20 over the course of the next couple of years. So now they're slashing their target to $10 in their bear case. And so a lot of people were laughing. I was getting a ton of bad comments when the video was posted, but nonetheless, hey, the stock so far has dropped 150 bucks since the video was posted, and it sure looks like $20 price target could be a reality. Now, just don't expect it to get there in the next 2 weeks, guys. I mean, we're still looking longer time frame. If the demand does drop, okay, substantially, Tesla's going to have a very difficult time. They could be facing the bankruptcy. At that point, the stock could collapse. But we're nowhere near that point yet. So the strategy remains stay neutral for now, stay on the sidelines, short at the pop to 220, 230, or better yet, wait for a huge volume to come in until we break that level of 187.5, which is a crucial level. Okay, S&P 500. Look how nicely all these chart patterns that we just looked at on all these different names and all these different stocks. How can we apply this to S&P? Well, there's actually, it's very basic. S&P is the same chart. You got a head and shoulder on S&P. We're trading under this critical level after a gap down. Okay, this 2870 level looks very attractive to actually come in on the put side. How does this chart look on a longer time frame? Here's your S&P weekly chart. 1, 2, 3 tops, multi-top formation with diminishing RSI. In other words, we've got a divergence as the market heads to all-time highs. The third time, look at how much lower on the strength we are in relation to the prior times where we've gotten close to all-time highs. What level are we targeting? Near term is about 2700, 2776 could be the first stop. 2700 could be the second stop. Why now? Well, look, this hook. Think of this hook, guys. It's about to cross right here. So very important to pay attention because in the next few days, we could actually go into a pretty strong drop. Now, let's review the earnings real quick. There's 3 trades that we're considering. A nice new little format we got going on for week 6 of earnings. And here's all the earnings, guys. Plug them in, study them up on the charts. If you haven't taken the charts diversion, make sure you do so you can do your own analysis on some of these things, being able to place your own trades going into some of these earnings announcements. Now, considering Home Depot 190, 195 puts on a bounce. So far, the reaction of Home Depot is it initially spiked to 193. Initially, it dropped to 188, spiked to 193. And so far, at the time I'm recording this, it's down trading to 189. This is not a high volatility stock, so this is definitely not my favorite trade, but it could be a trade, could make us some money today. So ideally, if it bounces back to the 190, 191 level, I would want to come in and buy 195 puts in the money. On some of these names that don't move a whole lot, you're always better off buying options in the money, guys. It gives you flexibility of getting in and out of the positions with less losses or larger gains. We're not targeting full 5% on these type of trades that move like turtles. Home Depot would be an example of a slow-moving stock. But you can definitely collect, in some instances, 100, 200% on some of these trades. So buy 195, 190 puts on the bounce and target this area. First level would be 188. Second level would be 185. Here's why. Home Depot. Look at all these head and shoulders, guys, everywhere. Check this out. Home Depot, head and shoulder, boom. We're trading under this critical level of the 50-day moving line, right? I mean, there's a lot of reasons. And so 187, look, that's the next level to 185. This is where they were coming in, putting a bunch of money in it. And this was the gap that was created between 187 and 189 area. So we're likely to close this gap at some point today. So that's why 195. We have a very low probability bouncing above that. 190, we could temporarily bounce above that. That would be a good opportunity to come in, buy the puts, target the area of 188, 187, and 185. And a little bit more clarity here. Triple top, just like the rest of the market. Look at where the hook is. It's just about to cross. So today could be the day when it actually crosses. That's why we want to stay on the put side. And again, this level right here, maybe 185. So we're not targeting a huge move here, but look how distinguished these red bars are on these charts, guys. And so clearly 3 tops, just like S&P 500. Clearly we got a divergence every time we hit the higher levels. The strength of the stock actually drops, which is at 99.9% of the cases predicting a further drop in the stock. So here, however, we're sitting above the weekly. If we're to drop this blue line, below this blue line on the weekly, I think more sellers would come in, and on higher volume would drop lower from there. Considering NDSN 130, 135 puts on a bounce, What do we see here? Well, we got a drop lower to 126 area, now slightly bouncing pre-market about 127. So hopefully by the time the market opens, we could be back to that 130 level, which is going to be a critical level. It's going to be a very difficult level at the same time for the stock to break on the way high. What do we see here? Move 11. What do we see? Double top. What do we see here? Divergence on the RSI. Second time it gets, the relative strength of the stock drops, followed by a drop. Why do we think there's a further drop? Look right here. Do you see a V? There is no V here telling us that further drop is possible. Look at the volume. Definitely much higher sell volume across the board over the last couple of months, telling us that the further drop is likely in the stock. Why is the 130 critical level? It sits right here at this orange line. If we pull back to 129, 130, that would be a good entry. As you can see, multi-drops, meaning gap downs. It's going to be very tough for this stock to climb above these gap downs that are being created over the last couple of weeks. Longer time frame on the weekly, same thing, what we observe on S&P 500. Triple top formation, divergence on the RSI. Guys, we're targeting this level of 120 to 125. Consider it 122.5. So come in at 129, 130, buy the 130, 135 puts, close them out when the stock hits 122.5. Look at the hook. Look how consistent these charts are on a lot of these stocks, guys. It's absolutely amazing. AZO considering 1,020, 1,030 level puts on bounce to 1,020. Now, this is a tricky stock, and it typically does trade on very low volume after it reports earnings. Now, there's been a couple of instances where we've been able to capture $100 drops lower. Overall, the report so far this morning is positive. The reaction is positive, but where it typically trades a few thousand shares to maybe 10, 15,000 shares pre-market, so far, at the point I'm recording this, 456 shares. Yeah, guys, it goes from 970 all the way to like 1,000, and the current bid is actually sitting at about 1,005, 1,010. So $40 move on 400 shares. I would love to come and short these guys when I see low volume pre-market like this. Now, by the time we go at 9:30, pay very close attention because the volume could be substantially higher at that point. So if you see like 20, 30,000 shares and the stock at 1,020, you may not want to put a huge position. But if you see the volume at like 3,000, 4,000 shares by 9:30 as we go and the stock trades at about 1,020, I would start buying them in the money right here. Now, consider the fact it may not actually stop at 1,020. It may temporarily go to 1,030, 1,035. All of these are great levels to come in and buy puts. Here's why. Look how consistent. Guys, another head and shoulder right here. Boom, boom, boom. Okay, another divergence on the RSI. Okay, do you see a V formation? No. Acceleration on the volume on the sell side over the course of the last month. All these signs tell us, especially this blue line, if we hit against that, right, 1,013 is the 50-day moving average. So I think we're going to break just above that. Maybe 1,020 would be a good area to short. Buy puts in the money. Now, the first target would be 970. And in the case of a complete reversal, we could go as low as 920. So get in 1,020, collect profits at 970, not the entire position, keep some just in the event we could see some huge volume to the sell side. Consider this is a head and shoulder. I could have a pop and drop scenario. Would love to see that trade later this evening. So loss of momentum is where the way we would like to describe this chart. It's gone from $500 all the way to $1,050. We're targeting an entry at 1,020, possibly 1,030 level. Look, guys, some people were buying the stock at 500. I think this earnings report is as good as it's going to get short term for AZO. I think people will come in and start taking profits. And, you know, this is a good area. I mean, you're coming in and literally shorting this thing at the top just as it went. The stock literally doubled in the last year and a half. So beautiful chart that clearly points to a fact that the loss of momentum could take place at any given moment, and it could do it today. So definitely worth the shot to buy some puts here, especially when observing the MACD. Look at this cross. It's just happened. So a bigger drop is in the making on AZO. the market moves yesterday was another 11, guys. Here it looks on the chart. Remember, characteristic of an 11 is when we open and close roughly at about the same level. So that's exactly what happens. We got a gap down, followed by a move higher. Another attempt at the move higher. Ultimately, we close right about the same level as we open up if we compare the levels of opening at 9:30 and 4 p.m. Today's sequence, 11. Whoa, that gets scary, guys. It gets a little scary. It's just kind of like that video of a sequence I posted back in October, November. I was talking about the move 666. 11 essentially is just a variation of a move 6. It's a top-in move. It's a top-in formation type move. So if we get another 11 or 6, for example, if we get a move 6, in other words, the market could go slightly higher first, and then towards the end of the day, we can get a sell-off between 2 and 4. Then we're going to have a sequence 11, 11, 6. If that's the case, that sequence, guys, is just as good as a 666 sequence. So get ready. I think we're going to get, or we're very likely, very close to getting this high probability sequence. And once we get, if we do get a 6 or an 11 today, guys, we need to step it up. Guys, I'm definitely stepping up on my positions. If we get a 6 or an 11 today, I'm definitely taking it as a market move, high probability sequence, and I'm loading up on puts. Here's how the 11-11 moves look on the 2-day sequence. Here's your pyramid number 1, gap down, followed by a pyramid number 2. Basically really tells you that every time the market tries to go higher, there's just not enough energy for it to do so. And it drops, it gaps low, it tries to stage a rally, and it fails. So when rallies fail, ultimately bulls give in, it results in a bigger drop. 5-day sequence, 781, 1111. The bears taking over again. This is how it looks on a longer time frame. 781, 1111. The importance of this, I drew these orange pyramids here, is this pyramid, the second one is lower than the first one, the third one is lower than the second one, and the third. Basically, it's a downtrend, another way to look at it. Okay, VIX numerically is high. It keeps stalling about 15, 16 level, which at this point looks like it's going to have a very hard time breaking below that 15 level after it set a 14.86 low just a couple of days ago. The first day higher in the VIX yesterday, after a number of days, actually 4 days going lower in a row, we're actually getting 727 opening yesterday, followed by a quick spike to 1763 and finishing about 16.35. So it does point, however, to a short-term drop. If we look on the VIX chart, we do get 2 pyramids on the VIX consecutively, so points to a drop. Maybe we're looking for a retest of a 15 on the VIX before moving substantially higher. Now, again, this is the area where we're looking for the VIX to be retested. This was the low that was set just a couple of days ago, 14.86. So ideally, what we want to do, if the market moves higher to the 2870 level, at this point, the VIX should be traded between 14.8 and 15. That would be a good area to start building your put position. Here's what we've been getting on the VIX on multiple time frame charts, and we're getting mixed signals on daily and weekly. And on daily chart, and this is why we are still calculating like a short-term move higher in the market today or possibly tomorrow, followed by a bigger drop, because some things here on the daily chart, they are actually bullish for the VIX moving higher. Now, a couple of bearish things you can see. We had an 11 here, we had an 11 here, we had 2 tops here that resulted in the drop. We're likely to create these uptrend higher. The only thing that is not bullish is this MACD. It's actually point, but it's not cross, and at the rate it's trying to make that cross could actually position to a breakout higher. In other words, where this black line is going to touch this orange line, has been doing the last couple of days, but then it could still break out to the upside. So that's what we're watching in the VIX to make our case a full-blown case to the downside. It would take for the VIX to jump above 16 after making a move lower to the 15 area again today. What we're looking is a possible scenario that's going to resemble this. So we just made this pop higher to the 22, 23, 50 area. I think we're going to make another pop, possibly not necessarily as high, but maybe 20 area right here. and it's going to look kind of like this double top right here. So I want you to focus on, you're looking at the daily chart and stockcharts.com. Look at this area right here. I think this is what we're about to get. So maybe one last day lower on the VIX followed by a spike, resembling in something that's going to look like this. If we look at the weekly chart, here's what we've got on the weekly. Still, we got this bullish crossover right here. We're still trading above that blue line and the orange line, which is bullish. And this is what I'm saying, the mixed signals, right? We are actually getting a bullish crossover on the weekly. So short term, bearish. Okay, long term, VIX is actually looking quite bullish. Next market move today could be a 7, and we're definitely keeping an eye open on a move 6, on another move 11. And if that's the case, if it's a 6 or an 11, you know what our strategy is. Now be careful, because that 7 could be a sneaky move today. Key takeaways: we're getting close to a high probability sequence. Do not trade huge positions yet until we get the final confirmations on the VIX, on another move 6 or another 11. Steer step to avoid big losses, because nailing the top, guys, could be timely, it could be costly, but we don't want to wait till we hit this area of 28.90, because it may never happen. So don't be afraid to add positions at key levels. Watch for a possible move 6 behavior between 2 and 4 p.m. We're definitely watching for 11-11-6, short bounces only. Today we're going to be paying close attention to see if the markets will actually hold this level of 28.52, which would be critical. We're still stuck in this range, but in the next 72 hours, we're definitely going to retest this 28.26, and then we're going to find out, based on the volume, if it ultimately, that move lower is going to resolve to the 2700s in the S&P. Guys, trade like a rock star. I wish you great results today. I'll see you in the next video tomorrow.